Well, good afternoon, everybody. It's Maynard and Colin with a special post-Christmas, pre-New Year's Close of Business Tuesday. I think one of the things that is as a topic that is one of the most mysterious yet dominant themes of today's world is Bitcoin. And we thought, let's take a break from the markets. We're all relaxing a little bit for the holidays. It's a good time to open our brains to this big topic. And we're really, really lucky to have Danny Masters join us. He's a great friend of the firm. He and Colin in particular have a good long friendship. And so, Danny, it's great to meet you. Danny is the executive chairman of CoinShares. He's a cryptocurrency investor and trader and venture investor. He's been a trader at Shell Oil and Solomon. He was the global head of the energy and trading business at Morgan Guarantee Trust, which became JP Morgan. So his credentials in this space are huge. He tells us he gets lots of people like us asking him, can you please explain this crazy phenomenon called Bitcoin? Colin, have I teed this up? And are you ready, or do you want to share some pregame with us?
Yeah, that was a great intro. And I figured it would be helpful to provide some charts that update the audience from Danny's last appearance. And recall that was May 12th that we last chatted. And at that time, we'd already seen Bitcoin advance from $3,900 at the low in March to about $8,600. And look what happened since. July, we got to 91 and change, breached 10,000 in September. And on December 16th, we had the first ever breach of $20,000 resistance. Now, this candle chart might, lead you to believe, how much higher can it go? It looks pretty lofty. Well, here is the exact same chart in natural logarithms with a trend line. So even after that advance, looking back to 2015, we are now at the trend line, and I will put a price out there. This is not a forecast, but I'm just making an observation that if we got now a number above the trend that was comparable to December 2017, that price could be somewhere in the vicinity of $100,000. I am not forecasting that, but you can see where some of this very strong enthusiasm for Bitcoin and other cryptocurrencies is coming from. And of course, part of the story is that COVID has accentuated a trend we've seen for many years. In the United States, the federal budget balance, which was already a pretty meaningful deficit, has become even more so. In October of 2020, on a trailing 12-month basis, that number is now at $3.3 trillion in the red. And when we look at the U.S. public debt, we're now pushing towards $30 trillion. So, that's the tee up for what's happening here. We have clearly an anti-dollar inflationary component to what's happening in Bitcoin. And Danny, I think, turning it over to you, the last time we chatted, you were talking about how institutional investors were now suddenly warming up to Bitcoin and what we're seeing. And, what would be your refresh on where we're at from your perspective?
Well, great to be with you, Maynard, Colin, my second appearance. Always nice to come back after things have improved dramatically since the previous podcast. I think those pundits whose forecasts deteriorate significantly probably don't have great sequel potential in the context of your audience. So I'm happy to be in the lucky group. I can't. I was actually wondering today, Colin, when it was that we last spoke, and I can't believe it was only May, because it just seems like an eternity ago. So, the world has changed so much, and Bitcoin, that I've been following 24 hours, 7 days a week since 2012, has gone through an amazing transformation during this sort of pandemic period.
Is that a place to start, Danny? I'm just curious. You've been doing it for 8 years-ish now. So what drew you to it? And then, because that's a long experience. So many people are probably much more recent to it than that. You've seen so much of it.
Well, great question. And I'll hark back to my my commodity trading days, when I left JP Morgan in 1999 to start the company, which at the time was called Global Advisors, but is the parent company also of this our whole Bitcoin monster, which has consumed everything. I had a very simple thesis back then, which was that the world was underestimating how much China would consume of global commodities and in particular energy. It was very simple. I also had a theory about depletion being probably underreported, under significant in terms of people's perception, and I was sort of secularly bearish for the US dollar on the basis of sort of long term weakening in fiat currencies as they normally do, and that was my overarching thesis. And what I discovered, in the thought process of going through that, was that it wasn't that you had to wait from 1999 to 2010 to actually see that the Chinese were a huge energy consumer. You just had to explain that investment thesis to investors, build a team of experts, build vehicles fit for investing in, and pitch that investment thesis, with that platform. And we were long gone from the commodities markets, at least in terms of the peak of our profitability, by the time the story actually came true. But we were very early to the story in terms of the perception that people might have about the story we were telling. And I took exactly the same approach with Bitcoin. I first came across Bitcoin when I was staring at a CNBC TV screen. The market had gone from $10 to maybe $100. No, obviously this was probably the graveyard slot at about 2 a.m. in the morning or something when no one else was watching because no one else cared. And I looked at that chart, and like you guys, I'm sure, I looked at so many price charts in my life. I didn't even have the sound on. I didn't know what it was. But I'm like, whatever it is, I want to buy it because it just had this tremendous energy to it. And I recognized that as a patterns I'd been looking at for years. So I sent $10,000 to a Chinese agricultural bank to buy coins on an exchange called Mt. Gox, which famously then blew up a year or two later. And I thought I'll never see that money again. And the next thing I know, I've got these Bitcoins. And I started to play with it, and I played with the technology. I have a bit of maths and science background. I did the sort of secure hash calculations. I did the Merkle trees. I did the nonce calculations, all this gobbledygook that goes into the Bitcoin mining and Bitcoin creation process. And I realized it was a really sophisticated network. And it looked incredibly like money to me. And then I thought about the characteristics of money: unit of account, store of value, medium of exchange, and then the sub characteristics: is it fungible, transportable, durable, and so on. And I'm like, wow, this is really interesting. And then by the same token as what I did with energy, I'm like, this is such an interesting story that a lot of people are going to be interested in this before we ever know if Bitcoin is going to be a success or not. And the hope that the fire hose of interest is going to have a very shallow nozzle on it, very, very, very small nozzle on it, because there just wasn't much liquidity and there wasn't much around. And it was, when I started, all of crypto in the world, which was entirely Bitcoin, was worth $1 billion. It's like 600 times that now. And so I looked at it like a commodity trade. This is just a good punt. This is like Zone 6 natural gas in a cold winter. It's like, a squeeze on heating oil in New York Harbor or something like that, where you just get in and you get out. And here I am now with, $4 billion, enterprise with 60 employees in 7 countries and, invested in 20 odd companies around the world. 30,000 clients, 8 billion in trading volume. This is a monster business that I couldn't have possibly imagined would have grown from that little seed. And I just followed it, and I found, as much as I thoroughly enjoyed my 25-year stint in the energy business, that wouldn't have been enough for me personally to put the kind of effort in that I put in for the last 8 years. And I found this industry absolutely fascinating, and I found the people incredibly smart, incredibly hardworking, and very forward thinking and very free thinking. And for an old guy like me, that's kind of inspiring. And so here we are. And so to answer your question, that was my circuitous route to where we are today.
it's an incredible story because you had, I mean, a phenomenal run in our world, and then you found this whole new world. So you're the ambassador, kind of reporting back to all of us.
That's right.
But so Danny, when you think about that long-term trade you described about Chinese energy demand and the dollar weakness, I think like everybody can get that. How do you describe the drivers of Bitcoin? Succinctly.
Well, I mean, and
I only say succinctly because it's like it seems like.
Let me give it to you in a nutshell.
It defies.
Let me give it to you in the shortest nutshell, the smallest nutshell that I can possibly do this in. Okay. Now we're all familiar with the internet. Okay, we're all totally familiar with the internet. We're all familiar with how the internet created degrees of freedom for humanity that people couldn't have imagined before, like Uber and Airbnb and Amazon. I mean, no one, we knew we could connect computers and message each other and get the weather back in the day, in the late 80s, whatever. But we couldn't conceive of the new technologies that would empower, okay? And this is all because of this, one computer can talk to another computer gig called the internet, right? If you wanted to summarize in the smallest amount of time I possibly could the importance and the relevance of Bitcoin, think about it this way. Bitcoin is that part of the internet where you cannot copy and paste. And let that sink in for a second. Because, if you have a sensitive information, you have data, you have a picture, you have a file, you have a Word document, a presentation, copy it 20 million times and send it everywhere. But if you have a dollar on the internet, you can't copy and paste that. That doesn't make any sense. And Satoshi Nakamoto, the pseudonymous creator of the Bitcoin network, solved this problem, the so-called Byzantine generals problem, which is the accurate propagation of unique data around a dispersed system. And that's what made it just super interesting to me. It was like the bit of the internet that didn't work properly. And that's what Bitcoin really is. And cryptocurrencies, I think people just get cryptocurrencies wrong generally. Because again, to me, and maybe that's because of my background and your, background we share in common. To me, cryptocurrency networks are utilities. They are railroads, they are pipelines, they are electricity grids, they are toll roads. And just because there isn't a lot of digital value streaming on these things at the moment, I mean, that by the way is increasing every minute. And more assets are coming on chain, and more things are being railed on these cryptocurrency networks. But a crypto, this is the bit that people don't get. A cryptocurrency is the toll to use the network. It's the toll to send your crude up from Cushing. That's what it is, and that's why these things have value. Now, Bitcoin's a special case because Bitcoin is the Mac Daddy and the kind of origin of the whole thing. And so Bitcoin has become this reserve currency status within crypto where, and as volatile as it is, but there are thousands of crypto assets now. But when they unwind, they all come back to Bitcoin, just in the same way as when the stock market unwinds, everyone comes back to dollars. So it performs that reserve currency kind of effect. But a lot of other crypto networks, so take, you may not have even heard of these, Polkadot, Cardano, EOS, Tron, Ethereum you've probably heard of. These are all utilities that transport unique digital information around the internet. I don't know why that's so difficult to understand for everyone. People have a really hard time understanding that. But it's that simple. We recently tokenized gold. Okay, so we created two gold tokens, DGLD and WDGLD. One rails on the Bitcoin network, one rails on the Ethereum network. And this is just a great example of the sort of new thinking that people are beginning to come to. And gold's a uniquely suitable asset for tokenizing because it's outside the banking system. It's not a security, and it just works a lot better than some of these other more difficult things. But think about I don't know what the number is, 60 trillion. I don't know what the number is in gold ETF, some huge number. Gold ETF, so you want to hedge your systemic risk. So you want to buy some gold. What do? You go and buy a call option on GLD, the gold ETF. Well, there's an option marketplace, there's an option market maker, an option clearing system, an option pricing agent, and then the underlying ETF, which has got a security trustee, 160-page prospectus, another broker, another bank, another dealer, and there's 14 people between you and your gold. And gold started as the ultimate bearer asset, but totally physical. As gold has become more digitized, it's become ever more intermediated. And now you can you can break that mold immediately. You digitize gold. We have 25 million in digitized gold, where I could ping you across your messenger on this Zoom screen right now, the private keys to your gold. That would be your gold. There is nothing between you and your gold. You can pull your truck up to our vault in Switzerland and pick it up. End of story. You can use it as currency. You can program it to do stuff for you. Like, if I don't log onto my email for a week, I'm obviously dead, so I send it to my kids. Easily doable. You can hypothecate it. You can send it to a lot of these lending platforms now. Create an interest rate on it. You can do a lot of stuff with this that you can't do with an ETF, and you're a lot closer to your goal all the time. And this is it's a simple example, but that is the kind of thing that ultimately sits on a crypto network.
I mean, that's such a fascinating point. It brings organization and structure and disintermediates all of the disorganization and stuff that gets in the way. It declutters. And it's so fascinating to see, it's almost a cliche now. People emphasize, but it's used for illicit activities or illegal. Well, so are dollars. I mean, what currency doesn't have some kind of attribute like that? What's fascinating is that you can take these tools, these utilities, and bring them into jurisdictions in the world that are highly disorganized and suddenly have a banking system and suddenly have a currency and an authentic medium of exchange and store of value. I mean,
absolutely
that's fascinating.
It is.
How do you see so many of our viewers are corporates? So, companies managing risk, lots of capital that they're managing, deploying, borrowing, et cetera. How do you see Bitcoin fitting into the corporate environment?
Well, that's a very topical question, I must tell you. I mean, it's, Bitcoin it's like the Batmobile, it's got like 7 gears, the small turbo, the big turbo, the ultra turbo, the giga turbo. And we've just had, just the most incredible lineup of these things, which has ended in corporate adoption. Now, so let me just wind it back. We start off with a pandemic and everyone goes, sell everything. Bitcoin goes to 3,500. And then people go, wait a second, this is the death of physical money. It's the new work from home digital environment. And every central bank balance sheet in the world is exploding. So let's start buying Bitcoin. Then you start to see inflation in ways that we didn't really expect to see it. I remember when I was in the States in July, I went to try and buy an iPad. No iPads. Three mega stores, no iPads. Why? No one's going to China, no traffic from China. This is supply chain driven inflation and asset pricing. There are different types of inflation that we're used to. But you got that. Funny enough, I think the seminal moment, if there was a seminal moment for crypto, it was when Paul Jones wrote his Tudor BVI fund report. And he said, we're in an inflationary environment. Might not be the inflation with CPI we're used to, but we're in an inflationary environment. Here's 10 trades, curve steepeners, precious metals, commodity currencies that will protect you in an inflationary environment. I'll rank them all. And he ranked them all in terms of, upside and cost and friction and liquidity. And he put Bitcoin first. And in a split second, and I know Paul since pre-Osprey days when Colin and I used to work together. He almost became our initial investor, which was a spot taken over by Lewis Bacon ultimately. But it was a close run thing. And I spent some time with Paul. I got great respect for him, worked with him in the Robinhood Foundation a little bit. And what a great guy. And in a nanosecond, because he is such a leader and such a voice, the career risk for a portfolio manager owning Bitcoin turned into career risk for not owning Bitcoin in a day. And since then, there's been an explosion of other money managers. Stan Druckenmiller, someone, strong monetary understanding and background, I would say endorsing it, but accepting it. Certain journalists that have been trolling me for the last 10 years. I'm like, okay, we got it wrong. Fidelity obviously has been there at the vanguard. Van Eck is there in the States, pumping stuff out. And, it just saw this like coalescence around the theme. And now you've had any number of names involved. Jack Dorsey, Twitter and Square. I mean, this is a guy who sort of knows technology, sort of always been Bitcoin friendly. And then in this sort of giga turbo at the end, it's like, you know what, we're going to put this in our treasury. We are just going to put Bitcoin in our treasury, like we'd have euros, or we'd have dollars, like we'd have gold. This is a treasury asset for us now. And everyone's like, oh, this could never be a treasury asset because of the volatility. Well, looking pretty good for the guys that did it. Then you had this guy, Michael Saylor from MicroStrategies. MicroStrategies got long history as a weird tech company, boom and bust, and all this kind of stuff. He took it over. I'm not sure even what their underlying business, how good it is or otherwise, but he made the statement, we're going to start buying Bitcoin for treasury. And there's been a number of companies now that have done this, and their stock PayPal, integrated Bitcoin into their network. I couldn't believe that, by the way. That was something I never thought I'd see happen. And I have a US PayPal account, even though I don't live there. But and I bought some Bitcoin on PayPal just for shits and giggles, excuse me. And oh my God, how smooth was it? How fast was it? How easy was it? How little friction and slippage was there on it? And I'm like, this is unthinkable to where we were even 6 months ago. And I think what we're going to see now is, it is just going to become a thing where companies hold part of their treasury in Bitcoin. And I wouldn't be surprised. I look at Colin's, log chart, and I understand what he's saying. And look, I mean, I have a hard time being bullish here, Bitcoin at these prices, but that's just vertigo. In terms of what I see in front of me, that may not be the right assessment. But I wouldn't be surprised to see sovereign nations start to do this. And if that happens, then that's another $10,000 on Bitcoin.
Danny, maybe you talk a little bit about the supply constraints that were built in at the start, because I think maybe some folks aren't necessarily aware of of that limit that's embedded in the product.
Sure. Well, part of Bitcoin's sort of DNA is the encoded, hard-coded fact that there will only ever be 21 million Bitcoins. And that's almost irrelevant at this point because 18.5 odd million have already been produced. And the tail of production is actually, quite shallow. There's 900 Bitcoins, a day produced right now. Another 3 years, that'll go down to 450. 2 years ago, it's down to 450, and then 2 years again, it halves to 225. But we've really seen the bulk already. And what people, I think this is kind of interesting analogy to oil, actually. And I've made this argument to people in Bitcoin before when I've said, listen, the supply of Bitcoin is going to halve and the market's not reacted. And I've got blogs going back to 2015 when Bitcoin was going to halve. And I'm like, call me old fashioned, but I come from a market where if OPEC came out tomorrow and said, we're going to halve world oil production, I think the oil price would do something. And is it because everyone knows the date of this and is it discounted? Well, actually, these halvings have been market events, despite the fact that they're completely discounted, because what actually happens, there isn't much of a speculative bubble, like fundamental traders looking for a stock draw. What happens is there's a natural flow. And I said this back in 2015, can't remember, but it was like, at the time, there's much, much smaller numbers. There's $400 million a day of demand, and there's $400 million a day of supply, $400 million a day of demand. Forgive me if that's not the exact number. And the market's not moving, so they're in balance. Now you cut the supply in half in a halving, then clearly, the price should go up. And it seems so obvious, but it did. And that's how unsophisticated Bitcoin was a few years ago. It was that simple. So anyway, the point is that, as Colin is alluding to, most of the Bitcoin supply has been produced. Bitcoin, there's a core to Bitcoin that never moves. Like, I think it's something like 40% of Bitcoin hasn't moved for 10 years. So like from the beginning, from very, very early on, or maybe it's some long period of time. And that's what we call the hodlers, people who hold their Bitcoin and never do anything with it. So you've got like three pools of Bitcoin. You've got the people that never sell, the people that will sell at a price, and then you've got the new supply of Bitcoin. And the new supply of Bitcoin right now is probably only a third of the daily inflows between PayPal, Grayscale, our products, 3IQ in Canada, the big players in call it the bridge between traditional assets and crypto, there isn't enough supply. So you need to go and get it. You're not going to get it from a hodler because they're never going to sell it to you. You got to go and persuade a guy that held Bitcoin at 3,000 in March with a lot of resolve that you want his Bitcoin. Well, you're not getting it for 4,000 because that was pretty scary. You got some for 10, you got some for 15, and that sort of marginal supply, which is the bit that needs to balance out the real time demand. You've literally got to bid someone for something they own that they don't really want to sell. And that's been a big driver to why the price is so big. So 18.5 million in existence, 1.5 million to go. The rate slows down, and we still don't seem to have quite bottomed out yet on the price at which the holders are prepared to sell to these corporates and these investors coming in through vehicles.
So do you mind just talking about the specifics of Bitcoin production, just so we all understand and why that's, the pace and why it's going down, that whole supply thing? I think people find that interesting. Mining is a complex subject. And I'd refer your viewers to the CoinShares.com website. I think, without being too egotistical, we've produced some of the best mining research that's out there. We've even done a mining study on the green energy impact of Bitcoin, or and how much or the sort of environmental view of Bitcoin mining, which is surprisingly positive, actually. And well, that's fascinating. And if you give us one or two of your favorites, Danny, we'll attach them when we send out this video.
Sure, no problem. So again, to analogize a little bit to the utility thing, this Bitcoin network exists and it consumes a lot of computing power. It's a very, very, very powerful network. It's probably the largest computer network in the world by a factor of 10 or 20. Like, if you took the world's most powerful supercomputer, it is multiples factors bigger than that. And the people that run this network, what are they doing? They're doing things like packet exchange in email. You're broadcasting Bitcoin transactions to I think the last time I checked it was about 8,000, 9,000 nodes, and a node is a computer that's running this Bitcoin software. And so the transactions get broadcast to the network when they're done. So if I send you from my electronic wallet to your wallet a transaction, what I'm doing is I'm signing something digitally, which decrements my balance on my wallet and increments the balance on your wallet. But that's fine, but the world's got to know about it, right? I mean, how's that? It's like clearing the trade. And we can make a trade OTC, if you like, because all peer-to-peer is the style of Bitcoin. But how does that trade clear? And the way it clears is that our trade, once we sign that transaction, it's broadcast to the network and it goes into a big bucket. And that bucket's called the memory pool. And then miners, who are these people who are simultaneously, broadcasting and receiving all the transactions that are done, they assemble all these transactions just in the way a futures commodity, a futures exchange would accumulate all the trades. In the old days when they write them on the tickets and throw them on the floor, you just collect them all up and you start writing the tape. You start printing the tape. And, the way that is done is complex, but essentially a miner has to prove his worth. You can't just rock up and say, all right, I'm validating all these trades. They all look good to me. Let's put those on the tape. You have to put skin in the game. And skin in the game is the computing power that you contribute to the network. And the way you contribute your computing power is there is an arbitrary mathematical puzzle that is set. I mean, it's complicated, but you could just as easily call it a random number generator, right? So someone creates a number, and then you run your random number generator. When your random number generator comes up with like the lottery ticket, the one that the right number, you get to be the person that then creates that block and assembles all of, a selection of the trades in the memory pool into a block, and you become this sort of official record. And the reason they make you jump through all those hoops, the reason the network makes you jump through all those hoops, is to prove you're a valid actor, you're a good actor, that you'll contribute that computing power to run that calculation so many times. And once you get it right, then your block, and if you go onto a Bitcoin block explorer, which is basically the tape, right? You'll see for each block who the miner or the mining pool, which is a collection of miners, which miner actually minted that block or who formed that block. And if it's a single miner, that miner's name will be on it, and that miner will get the Bitcoin reward, a mining reward. So he'll get 6.25 Bitcoins per block. And a block can be, hundreds of transactions, thousands of transactions maybe. He'll get 6.25 bits for clearing that block of trades. He'll also get, by the way, the individual transaction fees, which are the transaction fees we pay to the network individually to put our trade into that memory pool in the first place. So it's a complex story, and it's a unique construction. No one's ever done anything like this before, and it powers this network, which can remain distributed, it can remain peer-to-peer, it can remain autonomous, it can remain, ungoverned by any entity. There is no, people still call me and say, "Can I speak to the CEO of Bitcoin?" Or, where can I visit the Bitcoin offices? That doesn't exist, and that's all because you have this distributed system of nodes. So it's very complicated, but the way that Bitcoin's come into existence is, again, back to the utility example, it's the guys working on the road, the guys tarmacking the road. Get the money, get the Bitcoin.
So, Danny, maybe one question, just as we all improve our knowledge of all this. If we woke up and Bitcoin was down 25%,
yeah,
what would be? Because I think we're getting the drivers of the efficiencies and the supply demand and some of the other trends that Colin was hitting on that drive this. But what if it suddenly fell off? Why would it do that?
Well, this is what you'll probably find this amusing. So I've become a fan of TikTok, and my kids got me into it, and I'm just addicted to it. And TikTok gets, and I love golf, so I watch I get a lot of golf swing tips. It's like my best area for swing tips. But if you like skateboarding, you'd see skateboarders. This incredibly sophisticated software, and somehow I got onto the tasering part of TikTok. So there's, I keep seeing these videos where there's two Marines and they're holding probably a female Marine, all in camouflage uniform in some sort of warehouse. And they go taser, taser, and they shoot their fellow Marine with a taser so they can experience what it's like to have 10,000 volts going through your body. Okay. Now, why am I saying this? I'm saying this because having been in Bitcoin since 2012, I've experienced at least 50% drops. I mean, gut-wrenching drops where when you've invested years of your life in this, you kind of go, that's probably over, right? And after a while, you kind of get used to it. And I feel like a lot of people are coming into Bitcoin right now. I mean, Michael Saylor of MicroStrategies has gone public yesterday saying he bought 1.6 billion of Bitcoin this month for his own account, for the MicroStrategies balance sheet. That guy's never been tasered. He's never had the shock of coming in the morning and seeing it down 50%. And it's I traded natural gas in the most volatile of marketplaces. It's a whole order of magnitude bigger than that, the volatility you have to deal with. And so my Bitcoin strategy is, I almost even though it's an incredibly rapid 24/7, 365 market, I tend to trade it quite slowly. I bought Bitcoin in the COVID crash. And I sold Bitcoin stupidly at 14,000, about a month ago. But I bought it when everyone hated it, and I sold it when it seemed at least everyone wanted it. There were just more people that wanted it I didn't know about. And that's the way I trade it. That's the way I trade it. And I think, if someone's bought $1 billion of Bitcoin here, good luck. Listen, I hope they make money. I hope it goes straight to 100,000. But my experience over years goes, one day you will get it smack in your face for 25 or 50%. It happened when the Chinese banned Bitcoin, right? I mean, we were throwing a huge cocktail party for our clients because it just got to 5,000. By the time we got to the cocktail party, it was 2.5. That was a sort of hubris coming back to haunt you. When the Bitfinex exchange was hacked in 2016, went down 40% in a second. When the the one at Mt. Gox exchange was hacked. It went down 90%. Now, these are the moves I've been through, right? And I just don't think the people coming into Bitcoin right now have that experience. But that experience, it's probably not going to be quite as violent as it used to be. But this is not, hey, everyone's buying Bitcoin, let's buy it, it's going up. The risks right now, I mean, to me, there are two pretty significant risks. One is Bitcoin becomes a victim of its own success. Bitcoin today is still only, a few hundred billion in total market cap, like 300 billion today, whatever. Right? That's like a sixth of Apple. It's a half of Tesla. It's not even a big stock, not even a big single stock. But how much coverage does it get for what is not even a big stock? An incredible amount. And the coverage, unfortunately, for Bitcoiners, I think, potentially, unfortunately, for Bitcoiners, is it's a little bit like we don't want your dollar. We want our Bitcoin. And I've experienced this in person over many years. I'll pitch to, a team, wealthy investors, senior money managers, and stuff like that. It's particularly the high net worth people. And particularly the older high net worth people tend to be correlated, obviously. But when I'm done pitching, sometimes the feedback I get is, are you telling me, son, that I've worked all my life to make all this money and now there's a new kind of money and I don't have it and my money's no good? They don't like that. That is not a nice feeling for those people. So Bitcoin can become a victim of its own success. And, Steve Mnuchin hates it. Donald Trump hates it. They've got another couple of weeks in office. There's a lot of activity right now to clamp down on the very things that make Bitcoin great. The fact that I can send Bitcoin to you in your wallet, and it's kind of between us, right? You're not a money launderer. I'm not a money launderer. Of the 10,000 people I've met in Bitcoin, I think honestly I've met one money launderer who I reported to the authorities. This is not a money laundering business. It's just not, and it never was. But nonetheless, it is this threat that dollar hegemony becomes threatened, and that the dollar can no longer travel around the world. The dollar is no longer the base currency. There's a huge premium for the 40% of the world's international transactions done in dollars. It gives America an enormous advantage. And America is making a big mistake right now by clamping down on crypto. If there is a clampdown, and I think they might think twice about this, because the Chinese aren't going that way, especially, and many other countries aren't either. And the second thing that concerns me, so related to this, is a thing called US dollar Tether. And Tether is a digital dollar. Tether is what the sovereign US dollar should be. It's been done in the private sector by a bunch of guys offshore who are now railing $20 billion of capital around at the rate of $50 billion a day, which is ungoverned, unmonitored, unsanctioned, unlicensed, unregulated. But it is actually part of the fabric of cryptocurrency. It's the flip side of most cryptocurrency trades, actually. It's the settlement currency for a lot of cryptocurrency trades. And so by not having its own sovereign US dollar, it has opened the door to an unsanctioned US dollar, which in turn will then lead to a clampdown, which in turn could damage crypto, which in turn will damage the United States because the Chinese are going to go on with this anyway. So there's a few landmines out there right now like that, I don't say they keep me up at night, but if I came in tomorrow and the Tether construct had been interdicted somehow by law enforcement, tax, FATCA, FinCEN, who knows who, that's a big negative. That's the tasing that the newcomers to Bitcoin may get.
So when you said you reported a money launderer to a regulatory authority, was that just like, who did you know to call? Like, you kind of know
we're a heavily regulated business. We're regulated by FINRA as a broker-dealer in the United States. We're regulated by the National Futures Association, legacy from our commodity business, the Jersey Financial Services Commission, the Channel Islands, the Financial Conduct Authority, the Swedish Financial Services Authority, the Swiss Financial Regulator. I mean, we live in this intersection between traditional finance and crypto, and it's tough. Not a place you want to be, but it's the place we're passionate about being. So when we get we file what's called SARs, suspicious activity reports. So if we have someone come to us and, they want to do a big transaction, it's out of scope with what they normally do, they're a new client, they're coming from risky country. There's some glitch in their KYC. We report them to regulators.
So those regulatory agencies, those are places where you either have investors or offices, or how do you, those jurisdictions?
Well, typically it's where we're somewhere in, either authorized, registered, or licensed. All right, so we're or regulated. So we're regulated in the Channel Islands, in Jersey. We're regulated in America by FINRA. So in as much as the contact comes through that entity, that would be the regulator to which you'd report.
So do you think we're going to see more and more investors? Like, will we see a Robinhood Bitcoin kind of phenomenon? Like how
with stocks, you mean like with Robinhood stocks?
Yeah, like how pervasive will this become in individuals' lives?
Well, it's interesting you say that. So we've got some great friends. My former CEO, actually, of my company, a chap called Ryan Radloff, great American guy. He moved back to Atlanta to be closer to his family last year. But he took a job as the CEO of a company called Kingdom Trust. And Kingdom Trust is a licensed trust in, I want to say, South Dakota. It's run out of Murray, Kentucky. And it's very typical in the US. They have $14 billion in assets. They have probably around 200,000 customers. They have 500 million in crypto that their customers have bought. And they work on the basis that a registered investment advisor has a pool of clients. They recommend trades. Those trades are executed somewhere and they're given up to, actually at Kingdom Trust sometimes, but they're given up to Kingdom Trust. And what Ryan is doing is Ryan's putting an app called Choice on top of this crypto-friendly trust and custodian and qualified custodian. And he's getting a lot of traction amongst the Roths, IRAs, 401ks, that people can now put crypto in their retirement account. I mean, obviously Fidelity have been doing this. He's actually partnered with Fidelity as part of this whole scheme. And so I think it's going to become part of the investment lexicon. And, if you look at the stats from some of what we can see, from the securities that are linked to Bitcoin, this is an interesting study, I think, done by Fidelity, which showed the model portfolio of a 50-year-old, a 40-year-old, a 30-year-old, and a 20-year-old in their network. And the 50-year-olds have got, IBM, Glaxo, BP, Shell. And one of the most popular allocations in the sort of 20 to 30 is the Grayscale Investment Trust, another one of our peers, big company now run by Barry Silver in New York. The demographic is shifting down to that end of the curve where people are just friendly to crypto and they want to own it. And now through IRAs, Roths, and retirement accounts, as well as more sophisticated vehicles like Grayscale and ours, XBT provider, you're seeing just more absorption, and it's going to become, I think, much more common to see it just as what you do, part of your portfolio.
Well, one thing that might contribute to that is the inflationary landscape that's coming. And it's been quite a long time since we've had the traditional inflation. We talked about asset inflation, how it's shifted a little bit with the temporary effects from COVID. But I noticed that a lot of these analyses are kind of looking backwards. Like what would have happened if you had held it for 10 or 20 years? Well, what's the prospective number? Because if we do get to a 3 or 5 or 6% CPI world compounded, the great story of the next 25, 30 years is natural resources, that whole list that Paul Jones had. So, I think that's something that really has to be underscored. And I'm curious to see how the collision of an aging population and that need to protect the real value of a portfolio sort of leads people back to commodities and crypto and like-minded products.
Yeah, I totally agree. And it was interesting because Goldman Sachs now turned a little bit more pro-crypto. Everyone was against this at some point, but they turned a little bit more pro-crypto. But before they turned pro-crypto, someone wrote another trolling trash piece against Bitcoin, one of their analysts. And one of the things they said was, Bitcoin has not performed well in inflationary environments. And we're like, what inflationary environment? It's been around since 2009. What inflationary cycle are you talking about? I mean, because you just can't judge that on the basis of its novelty. But yeah, I mean, I think that I mean, I don't know if you saw this particular chart, Colin. I know you're a big chart guy, but I think JP Morgan produced it, and it was inflows to crypto funds and outflows from gold funds, and these two lines are going exactly in the opposite direction. As people, and we're seeing it, we're seeing it on the ground. I've got multi-billion family offices coming to me saying, I've got 3% of a family wealth in gold, and I want 1 out of those 3% to be in Bitcoin, which is a $20 or $40 million ticket. So that is a real thing, both in terms of what you see in the numbers, but it's also real in terms of what clients are doing.
Well, we've talked in the past that, you had gold as sort of the original inflation hedge. Then you had the GSCI come up in the 90s to take advantage of the term structure in the forward curves. But of course, when you have interest rates at 0 or below, that really limits the degrees of freedom that a forward curve can have. So the flattening of the term structure, hurts the GSCI strategy. And now you have this need for something that's pro-cyclically tied to inflation, and here's the device. And it's curious to see how high it might go. Although I am mindful of your warning about the tasering. And when you look at these holders who have held for 10 years, maybe their cost basis is $10, $100, $300.
Exactly. It is literally.
Yeah, they do say, hey, look, I want to see that first drop of 25%. Because I don't want to try to call the top. That'll be my signal that a top was done, and I'll sell at 75,000 or 50,000 or 30,000, whatever the number turns out to be. So the caution has to be out there that when you're in the land of inflation, by definition, things move around quite a bit. That's why nobody really wants there to be any inflation. But it's been so long since we've had consumer price inflation that I think people don't treat it seriously. I saw an article yesterday in the media where it definitely protested too much, that munis don't have to worry about inflation. And I saw that and I was like, munis definitely have to worry about inflation.
Of course.
And we'll see, when the lesson is learned.
I got to just throw one extra thing in here for you, Colin, which, I know where it comes from because you and I have similar backgrounds. The traders have got the deep pockets, the traders have got the low cost, are they going to wait for a downturn to say the market, the great traders do that, right? Yeah. Some of my ex-colleagues were very, very good at doing that. So they, there's no limit to how far they think it can go, but when it starts going down, they kind of get out. Well, that's made a little bit more difficult by Bitcoin because the excursions are so great. But I tell you one thing that's common to Bitcoin that is not common to the area that we worked in together, and that is this. I never met anyone in our business who believed in crude oil. Okay. People believe in Bitcoin. Bitcoin for some people is a vote against big banks, against establishment, against financial exclusion, against globalization. And this is what actually stunned me in my very early days in Bitcoin this was not a commercial enterprise. This was a passion, a vision, and a belief by some really smart people. And that's why there's an extra element there. It's not just technicals. There are people that will take this stuff to the grave just because they want it. It just makes them feel good to own it.
So
never felt that with WTI somehow.
Hey, some of our viewers may feel that way. But Danny, one question: when you think about Bitcoin's had this run, it's had this run this year. You think about the other things that have had runs. You think about its correlation to inflation, or its being inversely correlated, etc. Like, I think probably the person walking around thinks, well, some of these tech stocks are up hugely, Bitcoin is up hugely, and they tend to think they're correlated because it's had a run. And but what would you say about, in your experience, what Bitcoin has been most correlated with?
Well, again, I'll refer you to our website. There's some great research we've done on portfolios, with stocks and bonds and all this kind of stuff and where correlations sit. We've got a great index which mirrors the GSCI, where we have an index of gold and cryptocurrency. We've now got 4 academic papers on that, some of the best reviewed academic papers in the whole crypto space. So we've done lots of work on that kind of stuff. But I'll draw a very clear distinction here. Maynard, for your point, which is this. Back in 2017, early 2018, we actually, having been the first people in the world to create CoinShares, to create a regulated Bitcoin investment vehicle, we liquidated that vehicle. And we liquidated for a number of reasons. But the main reason was I just couldn't reconcile the then $18,000 price with what I was seeing on the technology front, right? It just didn't make sense to me. I mean, I think that was 2018. 2015, I was one of the most bullish people in the world on record, $4,000 price target, I think end of 2016. It turned out to be 8 or 9. I mean, and 4,000 was kind of the best price I could think of. So, it really gone a long way. So we liquidated that fund and then it immediately went, over a course of maybe 2 weeks, it went up to 18 and came back down again. And our investors were going ballistic. How could you get us out of this? It's going to 100,000. And I'm like, that's what I do. I'm the captain. Either get off the boat or I'm driving it. That's all there is to it. And sure enough, within 12 months, it was back down at 3,000 again, which was a great move for us. I mean, that's kind of, when you dodge the bullets, that's what really makes the difference. But the difference in 2017, 18 and now is there was nothing to back this up in 2017, 18, right? Now I see the infrastructure is 100 times bigger this year than it was back then. The constituent of potential investors of the quality and the intellect and the importance of them has gone up dramatically. The endpoints where you can do stuff with crypto gone up dramatically. The security on exchanges, the ability to do custody, the development of regulation in where as and where needed. It is just night and day to where it was back then. And I always think about my horrible Merrill Lynch portfolio that's some advisor got me into, because I had all those names, WorldCom, Pets.com, everything that went to zero in 2001. I had all of those. And the fact of the matter was that, when I liquidated that, I liquidated all of it. But I also had in there Amazon, Google, and a couple of other little ones, that I'm like, this is all rubbish, get rid of it all. Now, what I should have done is, I didn't know the difference between Pets.com and Amazon.com, but there turned out to be a huge difference between those two things. And that, I think, is the difference between 2017, 18 crypto and 2021 crypto. Like, this is the real deal now. I mean, I've been trading and been investing a long, long time. There is power in this thing right now, serious power. And, our organization, we've just been redlining for 6 months. So Christmas has been welcome, but it is for real. So yeah, I did agree. Your thesis, it's gone up with Tesla, which by the way I also don't understand, but it's gone up with Tesla. Would have been a reason why we sold in 2017, 18. I do not see that as just dumb money chasing momentum. It is much, much bigger than that now.
Well, look, that's a great place to end. Danny, you're joining us from Cyprus. That was fascinating, fantastic, candid. I feel tased, but in a good way. Tased with knowledge. Colin and I really appreciate it. So we wish you a happy New Year, and thank you so much for being with us.
It's great to see both of you. And all I can say is, if we do tack on another 15,000 between the next time we talk and now, I'm going to make this a regular occurrence.
You got a good feeling about us. That's funny.
You could be the lucky charm. I mean, I think that chart just picked it out perfectly. Right after that call, it took off.
Oh, gosh. Well, thanks so much, Danny.
All right, guys. It's a real pleasure.
Merry Christmas and Happy New Year, everybody.
Wish you a Happy New Year.
Yep.
Thanks.
Bye, guys.